Chinese. Lovely to see so many people for the 9:20 talk this morning. I salute you, I respect you. I raise my coffee to you as well. So thank you very much for joining us on what's going to be a lovely panel about Web3 and the opportunity in 2023. My name is Joe Hall. I'm really excited to be here today, sat next to my panel. I'm going to do the usual thing, allow them to introduce themselves, and then we're going to sort of set the talk in a maybe three-part series. We're going to define what Web3 is. Hopefully we're going to come to some sort of agreement. We're going to talk about some of the successes there have been in Web3, and then some of the challenges there have been in Web3, and have a little discussion about that as well. So yeah, my name's Joe Hall, and I'd like to start from left to right. Could you introduce yourself, and could you answer me one very simple question? Have you made an investment, your company, not you personally? Actually, yeah, let's do both. Have you made an investment in Web3 this year, and has your company made an investment in Web3 this year?
Thanks, Joseph. And hi, everyone. This is Jingwei from Fidelity Ventures. So Fidelity is one of the largest asset management firms globally with just under 10 trillion in AUM. So what we do is that we deploy balance sheet capital into early stage fintech companies. So we do everything from capital market, investment, wealth management tech. And what I cover is the Web3 extension of that. So I'm not a pure play Web3 investor per se, but because I come from a TradFi background, I can share some of the frustrations and why there aren't many investment opportunities in Web3 as of today. Now, to answer the first question, yes, we have made, but that was towards the end of November, to a crypto custodian. And we can get into that later. But personally, I'm somehow restricted due to the connectivity to the TradFi space. So there's a bunch of compliance reasons why I cannot deploy into Web3 personally.
Cool, thank you very much, Jingwei. Over to you.
Hi everyone, my name's Cathy and I work for NGC Ventures. A little bit about myself. I used to work in TradFi, but I converted to crypto native about 2 years ago. And the fund that I work for, it's based out of Singapore, but we consider ourselves a global fund, and we're pure play crypto Web3 native. And to answer to your question, we have made many investments this year, and we're still deploying, actively looking at projects.
Fantastic. This is what I really like about this panel today, is you've got Fidelity, which seems to be more conservative in the Web3 space, if I can say that. They actually have an amazing paper about how Fidelity, you're going to have to correct me on this in Jingwei, but Fidelity Digital Assets is Bitcoin only in the US, whereas Fidelity Global has an interest in Web3. But do correct me on this in a second. Or now, actually. Yeah, why don't you make it clear now?
Yeah, so Fidelity is the first asset manager to launch a digital asset offering. So we've created a Bitcoin mining operation as early as 2016, and then a custody solution as 2017. So yesterday, Manuel was on the panel. So he's in charge of the custody solution in Europe. And so we launched a bunch of products. So Bitcoin ETF in Germany, in Canada, in Hong Kong. And we are in the process of launching a few ETFs as well. But we all know how SEC is like. And separately, we've launched a crypto trading app in the US, as well as an institutional liquidity hub, alongside Sequoia and 3 Sigma and others. So yeah, we hear everything around Web3, but our current product offering is only on Bitcoin and Ethereum.
Fantastic. Whereas Cathy, of course, is crypto native, and they've made many investments so far in 2023. So you're in good hands, everyone. So I'm going to try my definition of Web3 here. Obviously, I use ChatGPT to help me, like any good journalist should. At least this is my argument from now on. So imagine the internet is like a big city, say Barcelona. It's got all kinds of cool places to go and things to see, but it's kind of like a Wild West town. There are good guys and there are bad guys, and sometimes it's really hard to tell who's who. Now, Web3 is like the new hipster part of town. There's new coffee shops, there's like all sort of smoothie places, cool bars. It's where all the cool kids hang out. It's like a high-tech hipster neighborhood where everyone knows each other and they all have this like super secret handshake, okay? So according to ChatGPT, you can trust that everyone in Web3 is there for a good time and they won't try to rob you. This is where I had a bit of an issue with the definition. And the best part is, in Web3, you get to be your own bank. You can buy and sell stuff just like you do in the rest of town, but instead of having to go through a bank or a middleman, you can do it all by yourself. It's like being a superhero. except instead of saving the city, you're saving yourself from all the hassles and fees of traditional finance. So come on over to Web3 and join the party. We've got NFTs, crypto, and decentralized apps galore. It's the future of the internet, and it's a whole lot of fun. This was the point that I checked to see who owns ChatGPT and what Web3 investments they're making this year, and had an argument at like 8 o'clock this morning with ChatGPT saying, like, why are there no negatives to this Web3 thing? Why are you so pro Web3? Either way, that's the definition that I've somewhat doctored to make it a bit more usable today. What do you think? Is this a fair summation or a fair analogy for Web3? Is this something you can get on board with? Jing, you're sort of laughing a bit there throughout. What do you think?
Well, my definition is very down to earth in terms of Web3. What I want to see personally is just interconnected digital economy where applications and platforms can talk to each other and can transact, right? So that applies in the world of blockchain, metaverse, IoT, virtual reality, right? That's pretty much the universal of Web3. So 3 building blocks, everybody know, blockchain for data, smart contract for the application logic, and then digital asset to store virtually any asset, fungible or non-fungible. But what I want to stress is that I think Web3 is an evolving concept, and I always quote a sort of quotes by Brian Armstrong, so CEO at Coinbase. So he says that he thinks crypto will go through 3 different phases. Phase 1 is crypto purely as an asset class. Second one is blockchain as a technology for financial service. And the third step is blockchain as a core tech for consumer-facing applications. So now I think we passed step 1, so when we step into phase 2, now naturally the definition for Web3 will change. So that's my personal view.
Okay, very interesting. How about yourself, Cathy?
I think I might add a little bit flavor of the crypto nativeness that I come from here. So I think Web3 is an evolving concept from Web2. Like, I definitely agree with that. That is definitely, it's changing every day. What we see Web3 is really developing around is this idea of decentralization that I think is super powerful. You mentioned that there is no middleman in the ChatGPT answer. I also gave an answer in the past few days to another investor. I think back in the days you had maybe without the banks you would have to keep your money under your pillow if you have to store anything safely. To safeguard it is your own responsibility. And then banks invented, and now you have a place that really can safeguard your assets for you. And with the involvement of fintech as well as technology, now imagine you can do that with technology alone. So we invested in a company called Consensus, and they are the builders of a product called MetaMask that I think a lot of us in this room use today. And with this concept of self-custodianship, you're able to safeguard your funds without a bank and able to do everything and anything just like you have a bank. So yeah, I think that's the idea that we really support, and I think it's super powerful in terms of technology.
I mean, that's a good point. Let's get a sense of how many people in the room have used MetaMask. Can I get a sense of how many's used it, and then how many have used MetaMask in the past, say, week? Anyone used MetaMask this morning? Yes, there's the degens. Nice. Okay, great. We're in good hands. Okay. I mean, I actually wanted to get onto concrete examples because we get a lot of buzzwords and acronyms and, ICO, NFT, DAO, DeFi, Web3, you name the buzzword. It sort of encapsulates a trend or a movement, but it's very hard to find the specific examples. You bring up, rightly so, Cathy, you bring up MetaMask. It's obviously a Web3 tool that's one of the earlier examples. Have there been any other successes that make it very clear or evident what the Web3 thing is? Maybe Jingwei, has Fidelity made investments into these sorts of fields?
Yeah, so, unfortunately, I cannot disclose the name just yet because they're in the middle of a fundraise. But also just to react to what Cathy just said, that's very interesting. So one of our core theses this year for Fidelity, for any asset management firms or banks is that we want to invest at the very bottom of the tech stack that powers the next wave of financial service firm entering into digital asset. In DeFi, the bottom of the tech stack is consensus or alchemy, right? It's a developer ecosystem where you can build the apps, it's where you can deploy nodes and everything around it. For institutional use cases, that's custody, right? So the modern fractional banking system is built on custody as a core offering. So State Street, BNY, they started a century ago by being a custodian. And from there, you cross-sell to other places and by creating that market on the demand side and supply side. Now, that's why Fidelity launched custody as the first offering. And that's why the major chunk of what we call GSIBs, so global systemically important banks, are now also doing self-custody. So Citi, BNP, HSBC, JP Morgan, Barclays, you name it, everybody is in the process of launching digital asset custodian solution. So imagine a future, now this is quite different to what Cathy says. Instead of custody with MetaMask, you can custody with your Barclays HSBC account. And so we invested in a Swiss-based custody orchestration platform that's powering self-custody for the like of Citi, BNP, and SocGen and others. And so that's, I think, it's a future winner, in my opinion.
That makes me kind of a little bit uncomfortable, the idea that, we can now custody with banks when the whole thesis of crypto is that you be your own bank, you hold your own keys. I know that, it's unrealistic to think of a future where we all become, self-custodial kings and queens, but it still makes me a bit like, oh, why do we have to have these banks? It's still part of the solution. Another point to that is that right now we're in a bubble within a bubble. The guys that are hanging around here are, very passionate about the movement. They're ideologically driven as well as, financially driven. But when we think about this on a global level, you bring up massive banks here. Do these solutions genuinely scale up to millions or billions of people, especially with blockchains, which, as we know, are quite slow, inefficient technologies? The more you scale up, the more you have to compromise on one of the other of the two scalability trilemmas. What do you say to that, Cathy? You're smiling away. You're the crypto native in the room.
I think there are so many exciting things that's happening in the blockchain space in terms of the technology front that I just want to highlight one that we see that really can actually probably solve some of these scaling solutions. So I think this year we're really looking into that concept of modular blockchain. And I think in the past, a lot of the argument against blockchain adoption is saying that it's not performant, it's not scalable, it's not able to transact as fast, as cheap as a centralized power of computation. And I think now we actually have some technology on hand that could change this, and we're super excited about this idea of something that is faster, cheaper, and also at the same time as decentralized. So really pushing the boundaries of trilemma that you mentioned there. I think the idea of the modular blockchain for us is not only just an opportunity, but it's also a representative of adoption. We will have different players, like the traditional banks, like the traditional Web2 players that have their own blockchain with the security of something like an Ethereum or some other ones that they choose. And it will be completely on a service-based choice, whether they adopt any sort of blockchain in the space. So I think from a technology standpoint, it's super exciting. From a capital point, we mentioned just about having a lot of these traditional players considering the technology as an option to grow. And I think this ideology with the next generation is absolutely crucial to get the next generation investors on board, and as well as retail users. So from a capital standpoint, I think we're super interested in looking at what are the next type of user applications that the next generation will like to use. So I think these are the kind of 2 points I just want to highlight here.
Yeah, would you say, or dare I say it even, modular blockchains are one of the opportunities for Web3 in 2023?
Absolutely.
Okay.
I think it's already pretty much taking off at the moment. A lot of good teams are being funded at the moment, and we're welcoming any builders to build on top of this idea. And we've seen very interesting byproduct of modular blockchain, be that zero knowledge proofs. And these are all technologies that I think a lot of times people in the crypto trading side don't talk about enough. But I think it's worth mentioning that the technology itself is grown and has so many different sides to it now.
Okay, interesting. And what about yourself, Jingwei? Is this realistically a solution that we're all going to be using in 2, 3, maybe even 5 years' time? Or will Web3 be a fad that goes away like ICOs did?
Yeah, so I think because Fidelity, well, we are strategic investors, so we take a shorter horizon than Cathy's team. So my horizon is more 3 to 5 years, where I suppose your horizon is, all the exciting things way down the line.
10 years, I
But
think
yeah,
so.
but in the short term, there's one very interesting opportunities I think everybody sort of heard of is sort of bring real world asset on chain, right? So we're talking about tokenization. So that's something that is truly strategic to us, and it's one of my core focus as well. But this market needs to evolve a lot for tokenization to be in play, right? Tokenization is about reducing the cost for asset managers, right? So once we can automate when it comes to transfer agency, funds administration, user onboarding, we can sort of move the post-trade intensive instruments like derivatives, bonds, ETFs on chain. This sort of less relevance for the equity market because the current state is quite efficient. So it is about a $10 trillion opportunities to bring some of that post-trade intensive instruments on chain. And we are seeing KKR tokenize one of the healthcare funds, Hamilton Lane did that with the buyout funds, Wisdom Tree is planning something, and all the other asset management firms are planning something. But one interesting thought experiment is that if 10 trillion were to be tokenized, the current market cap for crypto is only 1 trillion, and the current market cap for stablecoin is 150 billion, right? So there's mismatch between the buying power versus asset that can be bought on chain. So I think there will be the stablecoin industry will be very much is under scrutiny right now, and I think we are not that far away from a bank-issued stablecoin under SEC sort of guidance, and that will disrupt the entire sector in the next 2 to 5 years. So watch out for that.
Yeah, you heard it here first. Okay, we're being too optimistic, we're being too positive. What are you worried about? What are you losing sleep over in the Web3 space? What's really like concerning you in 2023? Cathy?
It's not nice to be the bad person delivering bad news first, so
Hey,
a
we're in
little
a bear
bit
market.
nervous
We've
here.
got to be honest.
I think the type of scrutiny we're seeing in the market from regulators is something that obviously is not good to see in this bear market in the short term. But I think in terms of regulation, in the long term, it will actually create such a much better environment for everybody, for liquidity, for a lot of the new ideas to form safely, and for talent, right? You want your best talent to work in a very compliant environment so they don't get caught and go to jail or any of that. So I think regulation-wise in the long term is going to be super helpful. And I actually see Europe as a good fertile ground for that. We have the MiCA coming in this region, and I think this region has actually been super open to more growth in this industry compared to, let's say, the US counterparts. And I think that's because people do understand there is something here. There is technology here, there is opportunity here, and hence I think I would actually be very, it didn't really answer your question, but yeah, I'm actually very optimistic about Europe as a region to grow.
Okay. I'm not, so I'll be the Debbie Downer here. Jingwei, how about yourself? We've got 30 seconds left, sorry.
Sure. What worries me is the funds inflow into Web3. So there's one KPI I track very closely, and that's the net deposit into digital asset funds products wrapped in ETF, bond, ETF index or mutual funds. So last year, there were only, and this figure shocked me, 500 million of net deposit into fund products, out of which 100 were short Bitcoin, so technically 400 million. This year, we're off to a good start. So far, it's 250 million net deposit into Ethereum Bitcoin products in January alone.
Yeah, but how much is short?
I guess time will tell.
Sorry, I cut you off though. Do finish your point.
So that's what I'm worried about. But there's sort of short-term optimism as to that sort of institutional retail flows coming back again. But then let's see if if there's a hard landing coming in front of us in the wider economy. That's something I'm quite worried about, which will, ripple to the crypto sector.
Okay, thank you. I appreciate the honesty. Thank you so much, Jingwei. Thank you so much, Cathy. This has been the talk on Web3, Where's the Opportunity in 2023. Thank you so much for tuning in. And yeah, have a lovely day at the conference.
Thank you.